Hello, friends. If you were born before 1966, there are 9 reasons to check your Social Security statement today. Not next week, today. That document can hide missing work years, wrong wage amounts, uncredited military service, and benefit estimates built on the wrong claiming age. The single biggest gap on this list is worth $121,440 over 20 years. Your statement does not correct itself. It does not warn you when a number is wrong or outdated for your plan, and the ordinary window to fix most of these closes 3 years, 3 months, and 15 days after the year in question. I am going through all 9, and the last one is the quietest problem on the list. One wrong digit that changes the age math on the whole page. Your Social Security statement is not a benefit postcard. It is a record-checking document with 3 sections that can each hide a different kind of problem: the earnings history, the benefit estimate, and the personal information at the top. Any one of those can be wrong, outdated for your plan, or built from life details that no longer match yours. Grab a pen. Put a mark next to every one of these 9 that sounds even remotely like your work history, because at least one of them is likely sitting on your page right now. Before I start, if you want to know when Social Security rules shift, when calculator tools update, and when correction windows matter, this is the channel that tracks all of it. The agencies do not send you a personal notice when something on your statement needs attention. The people subscribed here find out in time. Subscribe now and let's get into it. Now, before we go further, I need to address something. People hear a topic like this and immediately sort themselves into one of 2 groups. The first group is comfortable. Some savings, a decent work history. They figure this kind of review is for people in worse shape. The second group is on a tighter fixed income, and they have learned to assume the better outcomes are always for someone else. Both of those assumptions are wrong about at least one of the items I am covering today. On every single one, I will tell you exactly which group it helps most and why. The comfortable group has a surprise coming on this list, and so does the fixed income group. And stay to the end, because the last one looks almost too small to matter until you realize it can throw the retirement age math on the whole statement off by a year. Number 1. A work year that shows 0 even though you worked. Most people figure if a year is blank, they will notice it eventually. But eventually is too late if the correction window has already closed. The ordinary limit to fix a missing year is 3 years, 3 months, and 15 days from the end of that taxable year. And here is why a 0 year matters. Social Security builds your benefit from your highest 35 years of covered earnings. Those 35 years get averaged over 420 months to create your AIME, Average Indexed Monthly Earnings. That average is what the benefit formula runs on. A year that should have been about $42,000 showing as 0 is roughly $100 a month missing from the average before the formula starts. That can mean $15 to $90 less on your check every single month. Over 20 years, $3,600 to $21,600. Who does this help? Both groups. If you worked that year, you earned that year. The record should reflect it. One thing. If the missing year is last year or the current year, those wages may not be posted yet. Check again in August before filing a correction. But if the 0 is older, act. Sign in at ssa.gov/myaccount, open the earnings history, circle every 0 that does not belong, and file Form SSA 7008 or call 1-800-7721-21213. That is number 1. A 0 year is obvious if you look. The next problem is more dangerous because the year is there, so most people never question it. Number 2. The year that looks filled in but is still wrong. Here is a misconception that costs people quietly. If there is a number next to the year, most viewers assume it must be correct. But Social Security lists common reasons the amount can be wrong. a wrong name or social security number on the employer report, an unreported name change, an employer error, or wages posted under the wrong identity. A $21,000 underreporting on 1 year changes your average by about $50 a month. In the middle band of the benefit formula, that $50 gap translates to roughly $16 less per month. That is the 32% factor at work. $192 a year. Over 20 years, $3,840, from 1 year being partially wrong. Who does this help? Both groups. Comfortable viewers skip past it because the year looks filled in. Fixed income viewers feel $16 a month immediately. Pull your W-2s and final pay stubs for any year that looks low. Compare them to the statement. If something does not match, file Form SSA 7008 or call 1-800-77-21213. Say this: the year is on my statement, but the amount is too low. I need to correct a wage amount, not just add a missing year. Same correction window: 3 years, 3 months, and 15 days. That is number 2. And if you ever worked for yourself, the next one can be harder to fix than either of the first 2. Number 3. The self-employment year that never made it onto the record. Here is what catches people. They say, I paid taxes, so Social Security must have the income. That is not how self-employment works. You report those earnings directly to the IRS through Schedule SE on your Form 1040. If that return was missing, late, or incomplete, Social Security may never have received the number. And here is the critical difference. A tax return filed before the time limit can support an increase to your record. A return filed after the limit generally cannot be used to raise your earnings. That is a one-direction door. A missing $33,600 self-employment year changes the average by about $80 a month. That can mean $12 to $72 less per month on the benefit. Over 20 years, $2,880 to $17,280. The record does not fix itself. The self-employment year does not reappear on its own. Who does this help? Both groups. Side work, contracting, small business income, farm income, all of it cuts across every income level. Pull the filed return, the Schedule SE, and any amended returns. If the year is still within the time limit, amend through Form 1040-X at irs.gov, then file Form SSA-7008. Say this: I had self-employment income for that year, and I need to know whether Social Security has the amount reported on my tax return. That is number 3. That one hits people who ran their own work. The next one belongs to people who served. Number 4. Military special wage credits many veterans never ask about. Most veterans assume military service either counts automatically or it does not. The truth is more specific. If you had active duty service from 1957 through 2001, you may qualify for special extra earnings on your Social Security record. From 1957 through 1977, Social Security credits $300 per calendar quarter of active duty basic pay. From 1978 through 2001, it credits $100 for each $300 of active duty basic pay, up to $1,200 a year. After January 2002, no new special credits exist. If your service was after 1967, those credits should already be on your record. But if your service was between 1957 and 1967, Social Security may not add them until you apply for benefits. Your statement right now may not show them. The dollar impact is smaller here. 4 years at maximum extra credit adds about $11 in monthly average, which can mean $2 to $10 more per month. Over 20 years, $480 to $2,400. Not the biggest number on this list, but it is real, and it belongs to veterans who earned it. Who does this help most? Fixed income veterans feel it immediately. And here is the surprise for the fixed income group. There is no income limit. You earned it by serving. Pull your DD-214 and verify your service dates. Call 1-800-77-21213 or visit ssa.gov/benefits/retirement/planner/military.html. Say this: I had active duty service from these years, and I want to make sure any military wage credits I earned are on my record or will be applied when I claim. That is number 4. Up to this point, we have been fixing the record. Now I want to show you the number on the statement that can mislead you even when the record is perfectly clean. Number 5, the benefit estimate that ignores your delay plan. I need you to hear this one carefully because it changes what you are watching. The first 4 items were about mistakes, years missing, amounts wrong, credits unapplied. This one is different. Your statement can be completely accurate and still show you the wrong number for your retirement. The estimate on that page is built around a specific claiming age. If you plan to wait, the number you are reading may have nothing to do with the number you will actually collect. Here is the math. If you were born in 1959, your full retirement age is 66 years and 10 months. If you were born in 1960 or later, it is 67. But benefits do not stop growing at full retirement age. They keep increasing until 70. For a 1959-born worker, waiting to 70 moves the benefit to about 125.3% of the full retirement age amount. A man I heard from told me he had spent years staring at the wrong number on the page. Dennis, 66, outside Tulsa, retired plant mechanic. His full retirement age estimate was $2,000. He treated it like the ceiling. Never ran the age 70 comparison. When he finally opened the calculator at ssa.gov/myaccount and compared, the age 70 number was roughly $2,506. $506 more every single month. $6,072 a year. Over 20 years, $121,440. Who does this help most? The comfortable group. And here is why that surprises them. This is not a hardship benefit. This is the strategy number. People with savings and flexibility are the ones most able to choose delay and capture the full increase. The statement does not volunteer that. Sign in at ssa.gov/myaccount and compare your full retirement age estimate with the estimate at 70. Use the calculator at ssa.gov/benefits/calculators to enter planned future earnings. Remember, delay credits stop at 70, and sign up for Medicare at 65 even if you delay retirement benefits. That is number 5. That is the strategy number. The next one is family math, and for some viewers it is even bigger. Number 6. The marriage history your own statement does not tell you to use. Here is a misconception that quietly costs people for years. Most people assume spousal benefits are only for people with almost no work history of their own. That is wrong. If you are married, or if you were married for at least 10 years and are now divorced, you may qualify for a benefit based on your spouse's or ex-spouse's record. And that benefit can be up to half of the worker's full retirement age amount. Your own statement only shows your own record. It does not compare your retirement estimate against the spousal calculation. You have to do that yourself. A woman I heard from had no idea her marriage history still mattered to the math. Rose, 68, outside Columbus, former school cafeteria worker, divorced after a 24-year marriage. She looked at her own retirement estimate and figured that was the whole story. Her own full retirement age benefit was $900. When she checked the spousal rules and compared, half of her ex-spouse's full retirement age amount came to $1,200. That is $300 more per month. $3,600 a year. Over 20 years, $72,000. Sitting there in the rules the entire time. Nobody called her. Nobody sent a letter. The spousal angle does not insert itself automatically. Who does this help? Both groups, and here is the surprise for the comfortable group. There is no income limit on spouse or divorced spouse benefits. Many people with solid careers still qualify if the spousal number is higher than their own. This is not a low-income program. Check spouse or divorced spouse options using the estimator at ssa.gov/myaccount/spousal-benefits.html. Gather your marriage and divorce dates. Call 1-800-772-1213 and say this: I want to know whether I qualify for spouse or divorced spouse benefits and what documents you need from me about my marriage history. That is number 6. Most people think marriage history is the last hidden layer. It is not. Overseas work can scramble this page too. Number 7. Years you worked abroad that may still belong on the record. Here is what most people assume. If it happened outside the country, it cannot be on Social Security. That is not always true. The IRS says wages paid to U.S. citizens and residents employed abroad by an American employer are generally subject to U.S. Social Security taxes. On top of that, the United States has agreements with 30 countries that can determine which system covers the work. If your U.S. employer sent you to an agreement country for 5 years or less, you generally stayed under U.S. Social Security. And if a foreign affiliate had a Section 3121L agreement in place, those wages may belong on your record too. If $50,400 of covered overseas wages are missing, the average drops by about $120 a month. That can mean $18 to $108 less per month on the benefit. Over 20 years, $4,320 to $25,920. Who does this help most? The comfortable group. Overseas assignments and multinational employer situations skew toward viewers who assumed their records were too sophisticated to be wrong. Here is where that assumption costs real money. Ask your employer's payroll or HR department whether the foreign assignment stayed under U.S. Social Security coverage and whether a certificate of coverage or a 3121L agreement existed. You can also call 1-800-772-1213 or visit ssa.gov/international. Say this: were U.S. Social Security taxes withheld on these overseas wages? And was there a certificate of coverage or a 3121L agreement connected to this assignment? That is number 7. Foreign work is confusing. Railroad work is even trickier because sometimes the statement leaves things off on purpose. Number 8. The railroad line that looks wrong for complicated reasons. If you ever worked for a railroad, your statement may confuse you, and here is why. The statement shows yearly earnings from 1973 to present. Railroad earnings before 1973 are not shown on the page, but Social Security says it still uses them in calculating your credits and estimates. So absence on the page does not automatically mean absence from the math. But here is where it gets tricky. If you have 10 or more years of railroad work, or 5 or more years after 1995, you may qualify for a Railroad Retirement Board pension instead. In that case, Social Security will not use those railroad earnings in your benefit. The earnings belong under a different agency entirely, and sometimes the problem goes the other direction. Wages get reported to the wrong agency. Social Security regulations allow post-time limit transfers when earnings were reported to the wrong system or when the Railroad Retirement Board certifies creditable railroad earnings. That is one of the recognized exceptions to the ordinary correction deadline. When railroad wages truly belong in the Social Security record and do not get there, the miss is real. A $37,800 misrouted amount changes the average by about $90 a month. That can mean $14 to $81 less per month. Over 20 years, $3,360 to $19,440. Who does this help? Both groups. Railroad families often just need the right agency path. Compare your SSA statement with your railroad service records, including Form BA6 from the Railroad Retirement Board. Call the Railroad Retirement Board at 877-725-772 before assuming the SSA page is wrong. Say this: I need to know whether these railroad earnings belong on my Social Security record, the Railroad Retirement Record, or need to be transferred. That is number 8. And now the quietest problem on the whole list, the one that can change the age math on every estimate you see. Number 9. The date of birth that changes the entire age calculation. I told you at the beginning to stay for this one. Here it is. Most people glance at the personal information section and skip it. If the benefit estimate looks close enough, why bother? Because one wrong birth year changes the month your full retirement age begins, which changes the reduction or credit attached to every number on the page. Full retirement age falls between 66 and 67, depending on birth year. For a person born in 1959, full retirement age is 66 years and 10 months. For someone born in 1960 or later, it is 67. That is a 2-month difference from a single year. Now look at what that does to the money. If a 1959-born worker with a $2,000 full retirement age amount is treated as a 1960-born worker, the claiming age factor shifts. At age 67, the correct 1959 factor is about 101.3%, while the 1960 factor is 100%. That gap is about $26 a month, $312 a year. Over 20 years, $6,240, from one wrong digit in one field. Who does this help? Both groups. This is a pure record integrity issue. It does not depend on income, work history, or strategy. It depends on whether the number at the top of the page is right. Your move is simple. Go to ssa.gov/personal-record/correct-date-birth or call 1-800-772-1213. Say this: my date of birth on my Social Security record appears wrong, and I need to correct it because it changes my full retirement age calculation. Social Security routes this through a replacement card workflow. The corrected card usually arrives in 5 to 10 business days. That is number 9. So here is the full picture. The 0 year that should not be 0. Check the earnings history and file for correction. The year that is there but too low. Compare it to your W-2s. The self-employment income that never made it in. Pull your tax returns before the time limit runs out. The military credits veterans often never ask about. Pull the DD-214 and call. The estimate that may be using the wrong claiming assumption. Compare full retirement age with 70. The marriage history that can change spouse math. Run the spousal comparison. The overseas wages that may still belong under U.S. coverage. Ask payroll what system covered the work. The railroad earnings that may be sitting with the wrong agency. Call the Railroad Retirement Board first. And the birth date that changes the retirement age calculation on the whole page. Correct it now. 9 items. 9 different ways a single document can understate what you earned, what you qualify for, or what you will be paid. The statement does not correct itself. The employer report does not refile itself. The self-employment year does not reappear by itself. The military credit does not announce itself. The better claiming age does not jump off the page. The spousal angle does not insert itself automatically. The overseas coverage rule does not explain itself. The railroad record does not reconcile itself. The wrong birth date does not fix itself. Being entitled to a higher Social Security number and actually receiving it are 2 different things. The gap between them is information, evidence, and one step taken in time. If you found even one item on this list that sounds like your situation, think about who else needs to hear it. A parent, a widow at church, a veteran neighbor, a retired contractor, or the one divorced friend who keeps saying, "I already checked my statement years ago." Share this with them, not because they are struggling, because the odds are too good that at least one line on that page is missing context they never knew to look for. Subscribe. Share this with someone born before 1966 who has not looked at their statement lately, and I'll see you in the next one.